Welcome to QuickBook Audio, where we're embarking on a transformative journey through the psychology of money, timeless lessons on wealth, greed, and happiness by Morgan Housel. If you've ever wondered why some people build lasting wealth while others struggle, dreamed of financial freedom, or wanted to make smarter money choices without stress, this book is your guide to understanding the behaviors, mindsets, and habits that shape financial success. Whether you're a young saver starting out, a professional planning for retirement, an entrepreneur navigating investments, or someone curious about what wealth really means, these insights will shift your perspective, equip you with practical strategies, and inspire you to take control of your financial future. Picture this: you're working hard, earning a decent income, but your savings are stagnant, or you're stressed about investments, wondering why wealth feels out of reach. Meanwhile, someone with a modest salary quietly builds millions. What's the difference? Housel's research shows that wealth isn't about earning more, it's about behavior, like saving consistently, avoiding greed, and embracing patience. Through his 19 lessons, covering frugality, compounding, risk, and perspective, he reveals how ordinary people achieve extraordinary financial outcomes. We'll explore these ideas through clear, detailed explanations, blending psychological, sociological, and practical insights to make them relatable and actionable. We'll also address critiques, like the book's repetitive anecdotes or lack of technical depth, to offer a balanced view. This isn't about chasing riches, it's about building a wealthy life that aligns with your values. Before we dive in, hit that subscribe button and ring the bell to join our community for more transformative summaries. Let's make this personal. Drop a comment below. What's one financial goal you're chasing? Saving for a home, retiring early, or reducing stress, and what's the biggest money challenge holding you back? Maybe it's overspending, fear of investing, or chasing quick wins. I'm eager to hear your story, and I'll read every comment to cheer you on. Grab a notebook, find a cozy spot, and let's uncover the secrets of the psychology of money, starting now. Part 1: Redefining Wealth, the Psychology Behind Money. We begin with the foundation of the psychology of money, redefining wealth as a product of behavior, not just knowledge or income. Housel argues that financial success hinges on how you think and act with money, not just what you earn or know. This part explores why psychology trumps math, the role of behavior in wealth building, and key lessons like the power of frugality and perspective, setting the stage for a new money mindset. Why psychology matters more than math. Housel opens with a bold claim: financial success is not a hard science. It's a soft skill, where how you behave is more important than what you know. Most people assume wealth requires complex formulas or high earnings, but Housel's research, drawing on decades of financial data and stories, shows that behavior drives outcomes. For example, a low earner who saves 20% consistently can outpace a high earner who spends it all. This aligns with behavioral economics, where cognitive biases shape decisions, per Daniel Kahneman. Psychology matters because money decisions are emotional, driven by fear, greed, or hope, not just logic. Housel emphasizes that understanding your biases, like overconfidence or envy, is the first step to better choices. The role of behavior: habits over intelligence. Wealth is built through simple, repeatable behaviors: saving regularly, investing patiently, and avoiding reckless risks. Housel's data shows millionaires often have average incomes but exceptional discipline, saving 15 to 20% of earnings over decades. This reflects self-control theory, where consistent habits trump short-term impulses, per Roy Baumeister. For example, saving $200 monthly at 8% interest grows to $1 million in 40 years, proving behavior compounds like money. Housel argues that intelligence or education isn't enough. Smart people fail financially if they overspend or chase trends. The key is aligning behavior with long-term goals, like financial independence, over instant gratification. Key lessons: frugality and perspective. Housel's lessons highlight two pillars: frugality and perspective. Frugality means living below your means, prioritizing savings over status. Millionaires buy used cars and modest homes, banking the difference, as no one's impressed with your possessions as much as you are. Perspective is understanding wealth relative to your needs, not others. For example, $100,000 feels rich if your expenses are $50,000 but poor if they're $150,000. This aligns with relative deprivation theory, where comparison drives discontent, per Samuel Stouffer. Housel urges focusing on enough wealth that funds your goals, not envy-driven spending. Getting started, assess your money mindset. Reflect on your money behaviors. Do you save consistently or spend to keep up? Calculate your savings rate, savings divided by income. Write one financial goal, for example, save $5,000 this year, and one frugal habit to adopt, for example, cut dining out. This starts your journey to think like a wealthy person, embodying Housel's behavior-first approach. Practical tip: try a money mindset check this week. Track your spending for 3 days and calculate your savings rate. For example, $200 saved divided by $2,000 income equals 10%. Pick one frugal habit, like packing lunch. Say, my habits build wealth, 10 times daily. Journal nightly, am I acting wealthier? Try for a week. Extended exercise, create a behavior blueprint for a month. Track spending daily, aim for a 15% savings rate, and adopt 2 frugal habits, for example, shop sales, cancel a subscription. Journal weekly, are my behaviors improving? Check in with a friend. Track for a month, refining habits. Reflection pause, what's one money behavior you can improve this week, and how will it help your wealth? Key takeaway: wealth is about behavior, not just knowledge. Master frugality, perspective, and consistent habits to build a strong financial foundation. Part 2, The Power of Compounding, Saving and Investing Wisely. This part dives into Housel's emphasis on compounding as the engine of wealth, driven by disciplined saving and patient investing. It explores why time is your greatest asset, how to save and invest effectively, and the mindset of long-term thinking, giving you tools to grow wealth steadily. Compounding, time is your ally. Housel calls compounding the most powerful force in finance. Small, consistent savings grow exponentially over time. For example, $100 monthly at 8% interest becomes $150,000 in 30 years, $1 million in 50. This reflects compound interest principles, per Albert Einstein's eighth wonder. The key is time. Starting at age 20 versus 30 can double your wealth by 60, as every decade compounds gains. Housel stresses that compounding rewards patience, not brilliance, aligning with behavioral finance, where long-term focus trumps short-term bets. Saving, the foundation of wealth. Saving is the fuel for compounding. Housel says, savings is the gap between your ego and your income. Millionaires save 20 to 30% of income, living modestly to widen this gap. For example, they drive older cars to bank $500 monthly. This aligns with the savings rate model, where savings drive wealth, per Mr. Money Mustache. Housel advises automating savings, set up transfers to a separate account, to avoid temptation. Aim for a margin of safety, like saving 50% more than needed, to weather emergencies, per risk management theory. Investing wisely, simplicity and patience. Millionaires invest in low-cost, diversified assets, index funds, 70% of portfolios, real estate, 20%, or businesses, holding for decades. Housel advocates simplicity, avoid complex products like hedge funds, which underperform, per Warren Buffett's index fund bet. Invest consistently, ignoring market swings, as stocks return 7% annually after inflation, per historical data. This reflects modern portfolio theory, balancing risk and return, per Harry Markowitz. Patience is key. Housel notes most wealth comes from holding, not trading, as getting rich is one thing, staying rich is another. Mindset, long-term thinking. Long-term thinking means ignoring short-term noise, like market dips or trends, and focusing on decades. Housel says, the historical odds of making money in the stock market over 20 years are 100%. This counters recency bias, where recent events skew decisions, per Kahneman. Plan for volatility. Markets drop 20% every few years, but stay invested, as recoveries follow. This mindset builds resilience, aligning with Stoic principles of focusing on what you control, per Epictetus. Getting started, start compounding. Calculate your savings goal, for example, $200 monthly. Open a low-cost index fund account, for example, Vanguard, and invest $50. Write a 10-year financial vision, for example, $50,000 saved. This sets you on the compounding path, embodying Housel's patience-driven approach. Practical tip: try a compound kickstart this week. Save $25 in a jar or account. Research one index fund and note its returns. Say, my wealth grows over time, 10 times daily. Journal nightly, am I thinking long-term? Try for a week. Extended exercise, create a compounding plan for a month. Save $100, invest $50 in a fund, and write a 10-year goal, for example, $100,000. Journal weekly, is my wealth compounding? Check in with a mentor. Track for a month, increasing savings. Reflection pause: what's one way you can save or invest this week, and how will time help it grow? Key takeaway: compounding builds wealth through disciplined saving, simple investing, and long-term thinking, making time your greatest financial ally. Part 3, Navigating Risk and Uncertainty, Staying Resilient. This part explores Housel's lessons on managing risk and uncertainty, crucial for staying wealthy in an unpredictable world. It covers embracing volatility, avoiding greed, building a margin of safety, and staying flexible, giving you tools to protect and grow your wealth. Embracing volatility: expect the unexpected. Markets and life are volatile, Housel says. The world is a messy, unpredictable place. Stocks drop 30% every decade, and unexpected events, like job loss, hit hard. Millionaires embrace this, holding investments through crashes, as markets recover, per historical data, S&P 500 up 1,200% since 1980. This aligns with risk tolerance, where accepting uncertainty drives returns, per behavioral finance. Plan for worst-case scenarios, like recessions, by diversifying, stocks, bonds, real estate, to reduce losses, per portfolio theory. Avoiding greed: stay humble. Greed, chasing hot stocks or leveraging debt, destroys wealth. Housel warns, the hardest financial skill is getting the goalpost to stop moving. Millionaires avoid get-rich-quick traps, like day trading, which lose 80% of investors' money, per studies. They stick to modest, achievable goals, like 7% annual returns, reflecting humility, per psychological research on overconfidence. For example, they invest in stable funds, not crypto fads, preserving wealth. Margin of safety: protect your wealth. A margin of safety, extra resources beyond needs, guards against surprises. Housel suggests keeping 6 to 12 months' expenses in cash and saving 50% more than planned. For example, save $15,000 for a $10,000 goal to cover emergencies. This aligns with risk management, where buffers reduce vulnerability, per Nassim Taleb. Millionaires also insure assets, health, home, to avoid catastrophic losses, ensuring resilience. Staying flexible: adapt to change. Flexibility means adjusting to new realities, like market shifts or personal changes. Housel says, nothing is certain except change. Millionaires diversify income, businesses, rentals, investments, to adapt to downturns, per income diversification theory. They review plans annually, tweaking investments or goals, reflecting adaptive decision-making, per Herbert Simon. This ensures wealth endures through uncertainty. Getting started: build resilience. Set a 6-month emergency fund goal, for example, $3,000. Diversify one income source, for example, side hustle. Review your budget to cut one risky expense, for example, high-interest debt. This strengthens your financial armor, embodying Housel's resilience-focused approach. Practical tip: try a risk reducer this week. Save $50 for an emergency fund. List one risky spending habit, for example, impulse buys, and cut it. Say, I'm resilient with money, 10 times daily. Journal nightly, am I safer? Try for a week. Extended exercise: create a resilience roadmap for a month. Save $200 for emergencies, start one side hustle, for example, freelancing, and review your budget. Journal weekly: is my wealth more secure? Check in with a mentor. Track for a month, adding protections. Reflection pause: what's one risky money habit you can cut this week, and how will it protect your wealth? Key takeaway: navigate risk by embracing volatility, avoiding greed, building a margin of safety, and staying flexible, ensuring your wealth withstands uncertainty. Part 4: Wealth and Happiness, Building a Meaningful Life. This part explores Housel's vision of wealth as a tool for happiness, not just money. It covers redefining success, aligning money with purpose, overcoming comparison, and creating a lasting legacy, giving you tools to live a rich, fulfilling life. Redefining success: wealth is freedom. Housel redefines wealth as freedom, control over your time, choices, and life. True wealth isn't millions but enough to live on your terms, like working part-time or traveling. For example, $500,000 at 4% yields $20,000 yearly, funding a simple life. This aligns with positive psychology, where autonomy drives well-being, per Martin Seligman. Success means aligning money with personal goals, security, family, passions, not societal markers like luxury cars. Housel says, money's greatest intrinsic value is its ability to give you control over your time. Aligning money with purpose: live your why. Wealth serves your purpose, your why for living. Housel urges identifying what matters: family, creativity, impact, and directing money there. For example, save for a sabbatical to pursue art, not a bigger house. This reflects values-based financial planning, per George Kinder. Budget for purpose-driven goals, like 10% of income for charity, to enhance meaning, aligning with pro-social behavior research. Avoid lifestyle creep, spending more as income rises, to preserve purpose-driven wealth. Overcoming comparison, focus on enough. Comparison, envying others' wealth, steals happiness. Housel says, the only benchmark is the one you set for yourself. Millionaires ignore social media flaunting, focusing on personal goals, like retiring at 55. This counters social comparison theory, where relative status drives discontent, per Festinger. Practice gratitude: list 3 things you're thankful for daily, to shift focus to enough, boosting satisfaction, per Robert Emmons Gratitude Research. Building a lasting legacy, impact beyond money. A wealthy life leaves a legacy, values, lessons, or contributions. Housel suggests teaching kids frugality, mentoring others, or donating to causes, creating ripple effects, per generativity theory by Erik Erikson. For example, fund a scholarship to share your values. Plan your estate, wills, trusts, to pass on wealth and purpose, ensuring impact endures. This builds social capital, strengthening communities, per Putnam. Getting started: live wealthy. Write your definition of enough, for example, $50,000 yearly. Budget for one purpose-driven goal, for example, $100 monthly for travel. List 3 gratitude points daily. This aligns money with happiness, embodying Housel's vision. Practical tip: try a happiness builder this week. Write one enough goal, for example, save $1,000. Budget $10 for a purpose, for example, charity. List 3 things you're thankful for daily. Say, my wealth is my happiness, 10 times daily. Journal nightly, am I happier? Try for a week. Extended exercise: create a wealthy life plan for a month. Refine your enough goal, budget for 2 purpose-driven goals, and teach 1 person a money lesson. Journal weekly, is my life richer? Check in with a mentor. Track for a month, expanding impact. Reflection pause, what's your enough goal, and how can you use money to live it this week? Key takeaway, wealth is freedom and purpose, redefine success, align money with your why, overcome comparison, and build a legacy for a meaningful life. We've just unlocked the transformative wisdom of the psychology of money by Morgan Housel, a guide to building wealth and happiness through behavior. Let's recap the core pillars. Redefining wealth. Wealth is about habits, frugality, perspective, and discipline, not just knowledge or income. Power of compounding. Save and invest consistently, leveraging time to grow wealth through patience. Navigating risk. Embrace volatility, avoid greed, build a margin of safety, and stay flexible to protect wealth. Wealth and happiness. Redefine success as freedom, align money with purpose, overcome comparison, and create a lasting legacy. Housel's message is empowering. You don't need to be rich to be wealthy, just behave in ways that give you control. Your money choices shape a life of freedom and joy. Psychologically, this fosters autonomy, per self-determination theory. Sociologically, it builds resilience, per social capital theory. Critiques note repetitive stories and lack of technical depth, but Housel's insights resonate, as seen in ex-posts from readers who saved millions. You're not chasing money, you're building a rich life. What's next? Save $25, cut 1 expense, and write your enough goal this week. Housel says, the highest form of wealth is the ability to wake up every morning and say, I can do whatever I want. Start small, think long-term, and live wealthy. Grab The Psychology of Money, find the full book. Hit like, subscribe, and share this with someone ready to build wealth, a friend, family member, or colleague. Drop a comment with your financial goal, 1 habit you'll adopt, or your enough. I'll read every one and cheer you on. Thank you for joining me. Your money is your tool. Behave wisely, live purposefully, and thrive. You've got this.